his wife says, I don't want to worry you, but the guy who delivered the pizza was our financial planner. And the next one that's on here is, I just switched my 20-year home mortgage to a student loan. Follow me for more financial advice. There you go.
Yeah.
Some funnies for today. Okay, on to the next one. Okay, this was something that was, I got in Investors Business Daily, and it's basically from the last quarter, the fourth quarter of 2022. And it basically takes the leveraged funds and it's showing you what their returns were for that time. So we did show TSLL as one of my picks, but if the market continues down, what you want to be in is the AXS short of Tesla, which is TSLQ. And the return for the fourth quarter, because at that point in time, Tesla was not doing well, was 91.36%. You can see that defense and aerospace, which was a bull 3 times, had a return of 74.83. Then we had the internet bull 2 times. C-Web had a return of 30.35. And then we had the energy bull, and that was 2 times. That was up 45.17%. Then we had the financial bull 2 times. It was up 36.67%. We also had the 3-time EU bull, and that was up 64.26%, the FTSE. And one of the things that happened there is none of the global stocks were doing squat last year. And then from the fourth quarter on, if you look at the ETF screens on an ongoing basis in IBD, you'll see that there's 20 or more of the global funds that have relative strength of 70 or greater. And previous to that, there were none. We had the gold miners have a return of 30.58, and on and on and on. Here's another one that had a big return, which was the Korea bull 3 time, up 60.77%. We had the Direction Oil Service, ONG, up 99.26%. The Tesla Bear 1 time, up 92.31. So there's a Tesla Bear 1 time, and there's one that's a 2 time. And then there's also a short Tesla, which is TSLI. So there are 3 different funds that short Tesla. That one was up 91.60%. And then we had another one here, which was Natural Resources IEZ, which was US oil. That one was up 47.68%. Turkey was up 68.37%. So this is a nice list of shorts that you could look at, or bulls that you could look at. But the problem is that when IBD shows the best performing ETFs, they do not include any of the leveraged funds. So if you're looking for those that have outperformed, you're not going to find them on the list that shows their best performing ETFs. You can only find it in the ETF tables, and you have to scroll down and look individually at what is outperforming at that time. But anybody that's attending, and even those that aren't attending, are going to get this full slide. So you don't really have to copy it down. Moving on to the next one.
What did I miss? Oh, that.
Okay, what this particular slide is saying that the Morgan Stanley was saying what they were expecting was going to outperform for the coming year. And what they said was that the 10-year Treasury yield would end 2023 at 3.5% versus a 14-year high of 4.22% in October of 22. With favorable pricing, securitized products such as mortgage-backed securities may offer upside. The S&P will likely end the year near where it started, but with material swings along the way. US dollar will peak in 2022 and will decline through 2023. And it has been in decline mode at this point in time. And then it goes on to say that emerging markets and Japanese equities may deliver double-digit returns. Oil will likely outperform gold and copper, but Brent crude, the global oil benchmark, ending 2023 at $110. So that's something you need to keep on the back burner, one of those back cells in your brain there that, it would probably start to outperform after a while. Overall, investors will pay close attention to the economy, legislative and regulatory policy, corporate earnings and valuation, said Mike Wilson, Chief Investment Officer and Chief U.S. Equity Strategist for Morgan Stanley, because we are closer to the end of the economic cycle at this point, Wilson said. Trends for now, for these key variables can zig and zag before the final path is clear, when flexibility is always important to successful investors. It's critical now. Panning down a little bit more, I think there's something else that I highlighted, but maybe not. I don't see anything else, so we can move on to the next slide. Oh, get that back. There was something in there that we didn't talk about. Further down. Keep going. Okay. Up a little bit right there. European equities can offer, can offer a modest upside with a forecasted 6.3% total return over 2023 as lower inflation nudges stock valuations higher. In particular, financials and energy are more likely to perform well in this environment. Valuations are cheap. Cyclical winds are shifting in favor of emerging markets as global inflation eases more quickly than expected. The Fed stops hiking rates and the US dollar declines. That's the end of that particular one. On to the next slide. Okay, well, basically what happened was Munger from Oracle of Omaha was dissing the Tesla stock, and actually they don't have Tesla in their portfolio. They have an ADR that has outperformed Tesla, and the ADR is BYDDF, but it's not covered by IBD. So I asked the question of, is there a particular place that you can go to get more information about the ADRs? And that site is listed here. So you might want to pay attention to that, because there was an ADR that was top on the list today, and it was up like 14%. I wrote it down. The name of the ADR was AMAM, and it was up 53.97% today. Okay, moving on to the next slide. So what Charlie Munger said was BYD was so far ahead of Tesla in China, it's almost ridiculous. So keep that in mind. This is from McClellan's financial publications, and he basically talks about the Golden Cross. and some little known magic. And if we look at that particular chart here, you can see the golden cross here where the 50 and the 200-day moving averages cross, which had happened on some of the charts we had looked at, and you can see the upward movement once the 50-day gets above the 200-day moving average. You always want the 50-day to be higher, preferably the 21 to be higher than the 50, and certainly the 10 to be higher than the 21. So above the 50, above the 21, above the 10. Okay, moving on to the next slide. I'm not going to run out of things to say. I'm just going to run out of, breath, I think, to speak about. Okay, so what we see in this particular slide, if we could make it bigger, because it is not very large, this is basically a slide of showing what's happening with boil and cold. And going back to the beginning of the year, we started and the market was in correction. And we can see that boil at that point in time was down 36.7%. These are the fast and slow moving averages that come on the futures page, which is usually the next to the last page of the B section. And they're the fast and slow moving average. And at that point in time, you can see that they were very, very close together. And the price of the natural gas futures was 3.641. That was down from the 4.101 that ended the year. You can see that we made a high in here. It was 1778 at the end of the year. The return on cold at that point in time was minus 97.7%, because natural gas was doing better, and so boil was doing better than natural gas was, the reverse of the natural gas at that point in time. We went into correction, and you can see what happened was those numbers continued to go down, and we continued to go down in terms of what the future price was for natural gas. And from 1778, we went down to $12.16 on boil, and the return was minus 31.6% year to date. This was the year to date for December, but we already bested that, in just a short number of days, going from 31.6 to minus 31.6 from 31.9. We didn't really make much progress except for this one day in here where we had a nice move up, and it went up for 3.4% for the day, and the price was up a little bit more on that particular day as well. But then you can see that, we had continued deterioration, and we actually made a low of minus 67.3% on February the 3rd. Now this price is down to $5.81, made that for 2 days in a row. Dead nuts even on the fast and slow stochastics. That is not a good sign. Usually it means you're going to have a change in direction, and we did. For one day, it went up, and what usually happens is you make a low, you go up, you retest, and then you continue to go lower. And that's exactly what we did. We finished last Friday down minus 71.2%. The fast moving average was 20.7, which is smaller than the slow moving average, which was higher at 24.0. The price of natural gas futures were $2.49. And the price of boil is $5.12, a very large move down. So now we're going to go back up to the top here. If we can go back up to the top of the slide. And we're going to look at what happened to KOLD, which is the reverse of that. Can we go up a little bit more? Okay. So here we were ending the year at coal, KOLD, the reverse of oil, at minus 97.7. The price of coal at that time was $27.56. You can see that just the first trading day in January, we already had a return of 18.1%. Went down for one day, it went up for 2 days, went down for one, up for one, steadily going upwards, up to 45%, up to 54.7% in just a matter of like 10 trading days. Went from $27.56 up to $40.05. Here we are at 54.7%. We're already up to $42, up $15 a share. We go higher. We are now at 75.1% return, up to $48, up a $21 gain in just a matter of time. And if we go down further on the chart, okay, we made a high of 145% return on February the 3rd. It went down to 107% return. That was a loss of 34% in just 2 days period of time. And it was the first day that Boyle continued to go down and make that, fast and slow stochastic on the same day. You can see we continue to go up, 135.7%. We finished Friday at up 159.2%. So while you lost a little bit here, if you hung in, you would have had a very nice profit. It's up to $71. And what was that price we started at? It was a pittance. We started, at 20-some dollars a share. So watch that very carefully. You can use the Matador Economics site that I told you about. Sign up for it. It's free. You'll get the information every day. But you want to be on the right side of natural gas, and that side is going to be cold for a period of time, not because it's cold outside, but because we have an oversupply of natural gas, and because we have an oversupply and an under usage, that price is going to continue to go up. Moving on to the next slide. Okay, what happened to my next slide?
I have put it out. Okay, this is the one. You see it?
Nope. It just says RP. There's nothing else there.
Can you look at the?
You don't want to be looking at me.
Francisco, do you able to see my screen?
I don't see your screen.
We're seeing your screen, but seeing your Skype, not the. So you need to share. I mean, you're sharing your screen.
Oh yeah, I think it got disconnected.
Now it's back.
Okay. All right. We're good. Okay. What I do is I take the earnings calendar out of page B2 every week. And I'm looking for those stocks that have the best projected earnings for the next quarter. So here we are at Delta Airlines, and Delta Airlines had an expected next quarter earnings per share gain of 500%. Huge. You can see there are others that are in the 100, 200 range. But then the next one we have is NBIX. 1,500%. Mammoth. If we go down a little bit further, I think there might be one or two others. Here's TripAdvisor, 500%. Here's Albemarle, ALB, 717.8%. Ardmore Shipping, which is a smaller company, 596%. So if you were looking at those kinds of companies that you were thinking of putting on your watch list, and here's Trinity, 475%. I'm always looking, would I be buying Solar Edge? The relative strength on that one's 64. Why would I want that one? TripAdvisor's 92, and it's going to have 4 times what Solar Edge is going to do. Or wouldn't I want to have Albemarle at 91% relative strength that's going to have projected earnings of 717%? But this is in the paper every single week. One of the ones you might want to look at is an IPO, Dutch Brothers, has a relative strength of 89, and small position, but its expected return 300%. And Mercado Libre, one of my picks, 99 relative strength, expected return 368%. That was on my watch list, not the ones that I picked. Same thing with Trinity. Moving on to the next slide. That's a place that you want to go to see, well, what are some of the things that I might be interested in? Okay, what I do is I take next to the last page of the B section, I go into the futures for the indexes. So I have the S&P composite, I have the mini Dow, and I have the mini NASDAQ. I take the fast and the slow moving averages and the difference between them, and you can see that we were going up, 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 and here we were making a high on January 27th. The fast moving average was 89, the slow was 84.4. The following week, the fast moving average and the slow moving average came very close together. There was only 0.2 of a difference between them. You can see that then switched, and we're in a downtrend in this position because the slower moving average is higher than the fast moving average, or the stochastic. That's one of the ways that you can tell where the market likely is going. So here we are with the mini Dow. The mini Dow made a high earlier than the S&P did, made it the week of January 13th. At that point in time, the fast stochastic was 89.9. Following week, it switched down and the slow moving average took over. It was then up for 2 weeks and then down for 2 weeks. And you can see that during this period of time, we were in a sort of a, while we're still in an uptrend, we are not doing very well in terms of where the market's going. So here's the mini NASDAQ. The mini NASDAQ made a high on January 27th. The fast stochastic 92.2, the slow 88.7, switched the following week with the slow moving average taken over, which it has for the last 3 weeks. And while we're moving higher in terms of the index itself, these stochastics are basically telling you that we're not in the position that we need to be in at this point in time. So when this gets a little closer, and maybe we have 65 and 64 or whatever, we might be in a situation where it's going to turn over and the market's going to go up. But this is a way that you could look at where the market likely is going, because the futures are sort of foretelling what's going to happen. other thing you could look at on that same page is what's happening with the dollar. You can look and see what's happening with the commodities, and you can certainly see what's happening with bonds. But I take this information every single week, and I download that page every day. It's available for you to download. So I have them going back for a long, long period of time. Moving on to the next slide. I gotta leave some time for Francisco. Okay. This is taking what happened on 2/7, and basically I was looking for what were the types of ETFs that were doing the best for that point in time. So you can see that on a year-to-date basis, the best of the US broad stock index was Invesco QQQ. It had a return of 16.4%. That was the change for that particular day. The leveraged, the best one was Tesla Bull 1.5, the TSLL, which was on my list for today. It was up 95.4% year to date since January 1. Okay, next sector was the sector industry. The sector industry, we see that the ARC funds, which were in the toilet for a long period of time, 4 of them are on there. 3 of them all have a year-to-date return of 30% or more, and 1 has a return of 24.5. On the leverage side, we have the FANG stocks, 3 times leverage. FNGU has a return of 109.7%. Put that on your list. That's one that you want to watch. However, the micro select FANG, BULZ, was up 95.4%, which was very substantial, as well as the SOXL up 81.9%. In the global market, and remember, the global market was doing nothing. The highest return we have here is Mexico, 13.8%. Germany at 13.7%. We have the Euro stocks at 12.7%, and the EMU, EZU, up 12.4%. On the leverage side, what we have is the China 2 times CWEB up 17.1%, and the China Bull 3 times the Yin up 24.4%. Now, if China stocks took a hit today and that continues, then you would want to go into the YANG, which is the China Bear Bull time, 3 times. On the bond side, what we had was preferreds, which hadn't been doing squat for a long time. We have 2 preferred bonds that are in the positive column for the year, 11.1 and 8.5%, and the TMF up 15.9. That's the 20-year Treasury Bull 3 times. What was leading last year was the TBT. In the commodity side, we see that Bitcoin, the BITL, was up 39.1%. You can see that cold, KOLD, which was the short natural gas, was up 107%, and BOIL, which is the natural gas itself, was down 61.8%. I just gave you a snapshot so that you could see within a very short period of time where the leaders are. But this is something you can download every single day if you get IBD, and you will be able to look for yourself very quickly at what is outperforming in the market. Moving on to the next slide. You guys are probably all saying to yourself, is this woman ever gonna shut up? No, I got more information to share. Moving on. Raja.
You want to change this one?
Okay, we are going to look at the 197 industry groups next.
Yeah. That's what I put up.
Okay.
It's up to K.
Come on, baby.
Here now.
Okay. Now, this was from Friday's close, and this is the 197 industry group. So you can see that oil and gas field service was in the #1 position. You can see that retail office supplies is in the #2 position. You can see that the year-to-date change on oil and gas field services is only up 0.3%. However, retail wholesale office supplies is up 15.0%. Now, last year, we finished the year with oil and gas field services up 48.8%. So keep that in mind. We see steel producers in the #7 position, up 26.3%. Retail department stores up 25.5%. These are year-to-date numbers. If we continue to pan down, keep going. I gotta learn how to do this on my own. Okay, we have retail, wholesale auto up 30%. Oil and gas drilling is in the 32nd position. It is minus 11.2%, had a return of 95.2% last year. So if you look at these things, you're seeing rotation in the market, and you can see that oil and gas isn't doing squat at this point in time. If you stay in those and you are on the long side of oil and gas, you are going to lose money because they are not outperforming. Other things are outperforming, and those are the things that you need to be into. So I am going to say adios, and I'm going to turn it over to Francisco because he always has lots of good information to share. I hope I didn't bore you to tears, and I hope you'll come back again next month. Happy St. Patrick's Day if I don't see you before then. Bye now.